Hey folks, we'll get started here in just a couple minutes. Sorry I was a little late. I had to reboot my entire environment here. It's Windows. What can I say? Who knows, maybe I'll bring out the crystal ball today. While the room's filling up, folks, I've got the live screen here. Just about set to roll on everything. Welcome everyone to the Kindle Report, this special report, this amazing reversal that's happening today. And I just wanted to, normally we're in the live room, so I'm going to go through some basic stuff, and I'm going to actually do a lot of things that I do in the live room here. There's plenty of folks that are willing to compromise, and I appreciate that. Some of them are on here. Trading stocks, thanks for all this stuff on the other side. Appreciate your participation as always. So I'm going to be monitoring our chat line over there in the live room as well, and I'll be probably taking up some questions and things. So this is we'll start off by just talking about really what's going on here. And I think I'm going to go split screen here just so you can see the markets trade while I'm talking. I thought it was interesting. I caught a segment on CNBC on the way over to the office here this morning, and it was perfect. It was a bunch of guys trying to figure out why is this happening, and we're all asking the same question, right? So supposedly, I saw one of the most ridiculous. I have to read this to you. You know how you get those little badges from CNBC. This is the best one ever, I think. Stocks build on their rally from 2020 lows in big market turnaround. The Dow Jones up 800 points. Evidently, this is building on the 2020 lows. I'm sorry. You know, we're in a bear market. They're talking about 2020 lows. I don't know who comes up with this stuff. I don't know what that's about, but I got a pretty good laugh. I didn't want to close out that badge because it was too good not to share it with you. Yeah, so a couple of things have happened. We're actually trading up. I mentioned some numbers, and there are a couple of comments before we get going here. And those of you who watch the channel all the time, you know these stats that I'm talking about. But what we had happen is we traded below STX. We traded. Let me get these exact numbers up here real quick. So the low was 35.02, and literally when it reversed, it traded all the way up to I think 36.40, 42 range, something like that. And now here we are, a high 87, last trade 76. So I'll break down a lot of this stuff here, but there's something interesting, and I brought it up in the stream last night in the daily report, is that the VIX, those of you who watch the channel know I have these algorithms that predict what the indicators are going to do, which therefore translates into what the markets might going to be doing. So we had cycle lows projected. It was for yesterday. They printed today. So that's when the cycle came in yesterday. And typically, I always give the cycle 1 to 2 days, but the other thing that's been happening, and I'm going to show you all these things here in a few minutes. The other thing that's been happening here is that the algos have been predicting that the PPMs are all going to want to turn up in the next 5 to 8 days. And I saw some folks there on the channel on the normal videos saying, is the 5 to 8 day rally over? Well, I don't think so, but you know, what we saw with this news, we have such, I'm going to try to unpack my version of what I think happened, and then we'll get into really specifically looking at the markets here. And basically what's been happening here is there's so much, I would just say participation rate in the markets are huge, meaning there's so many players, there's so many people, there's millions of channels like this one out there, not millions, but hundreds of thousands of channels in the technical area. Everybody's, there's a lot of amateur Elliott Wave people, and everybody, you know, does 50% retracement. I haven't had a chance to check it out. We'll do it live together here. But somebody said that, I saw somebody quote, I think on Twitter or something, this was exactly a 50% retracement of the 2020 lows, and maybe it was 3,500, and you know that's the magic number, I guess, 3502, and then you know here we are rallying 177 points off of that low in just a couple hours. So it's definitely some insane amount of activity, but a lot of this activity, and I'll show you, happened it was a giant air pocket. There was no one there. So the sellers disappeared, okay? The order book blew up, and everybody, there wasn't that everybody was buying. They were just trying to buy. And the trying to buy, it just bid this market through the roof, just trying to get out. And there just were the sellers, everybody, it's one of those things where everybody was already had sold, so nobody was looking. There was no sellers, and there hadn't been an immense amount of buyers in there. So everybody's trying to buy, even if you were neutral, but there's just no sellers. And I keep telling you folks that I'm going to put out a video on how price discovery happened. Man, today was a perfect example of how it happens and why we see this volatility. And let me just look at something here. While I'm, this is just going to be a typical live session here. Yeah, so really 2.5 million contracts traded. Normally you do 1.7. This is a huge volume day, and huge volume days typically are can be a climactic day. So there's going to be maybe everything gets just completely worked out in one day, and then we've got to consolidate this day. So we've got we're going to hang out to the close today and just see how this thing can, if it stays together, what we see here intraday. I'm going to bring up the algorithms, and we're going to be going through 1 minute, 5 minute, hourly charts. So we're going to stay pretty focused on the markets today. We're not going to go and do any individual stocks, I don't think, unless that I don't think the markets are going to give us that kind of open space where it gets boring today. I don't think that's going to happen. So my goal here is to actually walk through the rest of this session into the close and get everything set up. Yeah, I don't know. Maybe the shorts went covered and went long, like somebody said, but there just were no sellers. Okay, zero. That's why we rallied like we did. Zero on a relative basis, and then finally some liquidities out there. Obviously, they've traded 2.5 million shares, but right now on the order book, let me just go full screen while I'm talking here. On the order book, there's 15, 20 contracts on a bid ask, and you'll see the action. It's actually thickening out. It was down to like 1 and 2 on a bid ask. It's still sevens, very thin here. And when you get this type of action, you just are going to get erratic moves where it's going to go from 76 up to 78.5, 79, back to 76 just randomly. Here we are already up to 78.50. So it's just going to move really big because a couple hundred lot order, to fill that order that comes in, and it's an aggressive order to buy or sell, it's going to move these markets up 200-300 points just in 5 or 6 ticks, and they're going to be very close together. That might represent 30 seconds or less. So this type of volatility is very difficult. So if you're trying to trade in here, I would be very cautious, because once this thing, because there's no liquidity, you can get these giant swings. Like right now, you can just see market was trading 76, now it's 77.25. If I were trying to quote this market to a large player, I'd be quoting it 76 at 78.50. That would be the bid ask. That's just what it's going to take to fill a reasonable order. So if I was talking to a big institutional client, I'm going to tell you, you want to buy 300 of these things. It's going to cost you at least 2-3 handles plus, depending on when you come in. And so that you can see we just traded 78.50. We're back at 76. So that's really the market right now is about a 2.5 handle market in realistic terms. Normally we have 50 cents to $1 is 2.5 times the volatility at the moment. And this is calm compared to what it was. It was 400 to 500 earlier, if I would have been live when the real craziness was happening. So really what we saw here was short covering, but when the buyers come in on that are short, someone has to be on the other side to sell, and there just wasn't anyone there. So now what we're seeing is some stability up here. We traded up to 87 just a few minutes ago, about 20 minutes ago. We made the high of the session, and that's well above any of the parameters that our indicators are showing. Let me put some other things up here. And this is a 5-minute chart here. So we'll start, I'll go full screen, and let's just get into a couple things here from the standpoint of, Todd, awesome, man. Todd's in our live room normally. Caught this thing at 35.22. By the way, that was the perfect spike reaction trade this morning as well off of that news. It's really was pretty classic, and of course the rebound was a little bit bigger. So yeah, nice trade. We'll try to figure out what's the right thing to do here. A couple things going on here with the algos and stuff. You know what? Before I dig into this, I want to do one thing here, and this is how we start off our normal day. So I'm just going to start to treat this as one of our normal trading rooms. So let's go here, and what we're going to do is just look at a review of what's happening. And one thing that is interesting, the 10-year. Let's take a look at the 10-year first. The 10-year spiked up, and it got to 4. Let me get this so you can see it on the screen. It got to 408. If you recall, on the on every day when I've been covering the 10-year, 404, 412 was a target. So we printed 408 on a spike. We're back at 390. So inflation's peaking. I saw some ridiculous story that somebody was saying that the reason why the market's up because now the Fed's going to pivot. I mean, that's like all they got. That's the only story they got. So, but really, it's a classic story, is what I'm just saying. More buyers than sellers, prices change, and you had aggressive buyers because you had people that were probably short trying to cover, and a lot of them were probably short well under 3,600, especially come in yesterday's close was somewhat ugly. But what I want to show you here is the 10-year is, if I go over to the weekly chart, and we just want to set up basically the way that I suggested everybody comes into the day, whether it's early morning or if you just come in, you want to set up the conditions around you, what's going on. And what we're seeing here is, if we look at the market grid for the market grid for the treasuries, what we're seeing here is 404, 412. That's the number. Those are round out numbers, right? We printed 408 even, and I've been talking about, I think we're just going to stay in this range. And all of a sudden, PPMs are still very positive, but we're going to head toward probably I'm going to say towards S1. I talked about this last night. There's still a 380 print possible in here. I know we just got these numbers on this inflation, and why is it acting this way? Because most everything is built in. Well, you know, the news lines are talking about this is the highest level from 40 years ago. I was actually in the markets 40 years ago, and they were higher, but they were on their way down when they were, they were much, much worse. We're almost double worse, 12% inflation. So there was a lot. Those numbers were pretty ugly back in the day. But that's just a headline number. That's, just like I said, they're talking about was the decline and a continuation from the 2020 lows. I don't know who came up with that. But the treasuries are going to get locked in up here, and they're pretty much on the done on the upside. Now the shorter end of the yield curve is going to continue. You can see right now over here, I'll just put it up here on the screen, the IRX, this is a 13-week T-bill. That is actually printing up well above it. This is a weekly pattern, but this is up at 359. And if you've been watching the channel, I'm not going to go through this today. We're going to go back to the markets. But I just want to set up that what we're seeing as part of this rally, and I talked about this last night, as the bonds go, so will the equities. This big spike up, the bonds came back in. Everything's basically in sync there. We look at currencies. The dollar is down. dollar's down 1%. Wait a minute, how'd that happen, right? That's because of these interest rates. What's going on with the treasuries are going back here to the treasuries. Let me go to the 30-year up here. 30-year was able to print at a 401 high, and everybody's talking about the 30s went over 4. They didn't talk about the 10 going up to 408, but everything is just kind of peaking out here. And I think what I'm seeing on the treasuries, I'm going to show you, we're going to go into the algorithms and take a look and set this thing all up, and then we'll start looking at the markets, and we'll get through the whole spectrum here as we go. But basically, we got interest rates backing off, we got the dollar backing off. This is all part of the story, and equities with this huge bid in there. So that's the setup for the markets as we sit here right now. So let's go back over and let's take some look at the what's going on here. This is the 5-minute S&P. Right now, the algos are suggesting that we're going to get some backfilling here. See if I can get this scaling just a little bit better so you can see it. I think I'm also going to throw the webs on here. So we've had a couple interesting patterns here from the standpoint of, I'm going to move this so I can have a little more real estate on the top side here. Yeah, so what we're looking at is we're crossing through the 10-period moving average. PPM 1 is right now still at 0.50, so there's some support here. Algos are suggesting that we're going to continue to move, roll over here. We're trying to get something that I talk about a lot on this pattern is a potential veil top. And what's set up here, a potential veil top, but we also have what I call a dragon head. And a dragon head sometimes will end up being an extension of the upside. The only thing that's telling us that it's probably not going to extend is that it looks like the momentum is starting to come out of the 10. So the 10 is going to be solid 36.75. We're trading right there at 76.25 right now. So what we're looking at is this thing holding along this upward slope. The next level down is down at 61, but that number is rising. It's probably more like 64, 65. And we do have some fib projections all the way down to 43. So we want to watch this pattern that sets up over the next several minutes. And I think I got everything set up here. I'm just, I think this is, bear with me one second. This is the daily. There we go. This is the 1 minute. I'll get these organized up here so that I can click through them. So this is the 1 minute. So you can see 1 minute's also starting to suggest, although this looks a lot like the 5, it is. Now we got the 1 minute. So 1 minute's pretty basically neutral here. Okay, I'm glad I got this up here. This pattern that we have here, we call the caterpillar. It's just going sideways. This is a volatility range right now that's set up. So right now we're just trading in this volatility range, and we just got live. So these are running real time. We just got some upward projections for 80, 83, and 84 fib target 1, 2, and 3. And on the 1 minute, we're seeing a slight upward slope here. There's a little bit of a bid that's coming in. So we're going to be looking at a couple things here from that standpoint. I'm going to go through the spectrum, still trying to set some things up here. And then we'll actually talk about maybe some how to set up some real-time trades. This is the daily. Look at this reversal. What is it? This also is setting up the trade that I talk about a lot, which is the 3-day, 3-bar trade, which is outside reversal. And those reversals are best when they happen at a low of a sequence. Well, we printed basically a new low on the year, and we got an outside reversal in a big way. Not only are we reversing yesterday's action, we're reversing two and 3 days ago. The high was 67 3 sessions ago, and here we are, trading right now at 77 with an 87 high. And you can see the algos, and I've been talking about this for several days. The algos have been predicting that we're going to see some upside here. PPM2 is being projected to go, isn't it projected to go positive for several days, but right now the PPM2 is at a minus 0.36, so massive amount of resistance at 3740. But that number, let me just get a number for you here. It's actually 3732 is the 21, and it is declining 14 handles per day, so that's going to be 3720. And then we come into Friday, that's going to be 3710 or so. So we're all of a sudden at a place where we could get a little bit of a rejection. But this 3-day trade will set up, and I'll be talking about that on the review and the normal commentary I do every day on tonight's video. But you can see the algos are where it's kind of grayed out and dotted. This is the projections of what the algo, which is a auto regression process that is forecasting the indicators. A lot of people have used this for forecasting prices, and are not very good. They're so-so at that. So far, what we've seen in these algos is it is like having the crystal ball. Somebody made a comment on Twitter, like, I got the new update of the indicators with a crystal ball feature or something like that. And what it's doing is just giving us an insight into a bar or two, and this is what's been happening all along. So if we come over here, this was the VIX chart that I showed you last night, and I noticed there's some interesting issues with trading view in some of these indicators. Oops, that's okay. I'm just trying to fix something here. All right, so this is interesting. This is what I was showing you. This is daily VIX, and what it's projecting is that the VIX is going to roll over big time. So don't know if this is right, but it was projecting for it to go down today. It did. It's looking like it's going to stabilize and continue. So once we get the update, when this bar closes out, there'll be a recalculation, and also the models will recalculate as well. But you can see, and I talked about this last night, that the VIX is definitely looking like it's going to go down. Embedded in here, I'm going to expand this pattern a little bit. You'll see these red dots here, and you'll see over on the right hand side. I don't know that you guys can see that. Let me look at. I need to expand something out just a bit so you can see it. Guess not. I'm sorry. Just trying to get this set up. But anyway, over on the right hand side, we can see the targets here are 29, 72, 27, 75, 26, 50. And this is for the VIX, right? So this is what the indicators are looking at. We have the Fibonacci pattern tool is also looking at these things. So we've got a lot of projections that are coming into this market right now. Let's take a look at the NASDAQ while we're just going through everything. NASDAQ's got the same pattern. Let's see here. I just want to see this. We've at least 2 days. The high so far today, 111, 117, 11,117. The high was 111, 136. So we've taken out the previous 2 days, and we're sitting here right on the 10-period moving average. But you can see the same thing is going on with the algos here, where they're starting to project where values of the indicator is going to go up. The only way this happens, and I talked to you about this last night, is that the value of the market has to get above the 10-period moving average. Right now, 11,193. So to get this to happen and to get the PPM1 to turn up, you've got to have values greater than the 10 in the days forward. So it's just predicting that there's a probability that we're going to be above that number, which is that right now 11,193 plus. So we are trading right now at 11,039. So another 100 points just about on the NASDAQ will have to happen before we can get this to happen. Okay. So these are predictive, but they've been predicting this for the last. If I went back and did a replay, you could see this 3-4 days ago. This is what was being projected, that something was going to happen in this time window. And then we also had, you can see this blue dot that's up here. Let me go full screen. You can see the blue dot, and what is there is a what is there on this screen is that we're getting a cycle on the NASDAQ. We had a cycle on the S&P. I don't know that we got one on the RTY, but everything is. This is how the S&P and the NASDAQ. This is how they're configured here, from the standpoint of what's going on this. I think what we're going to end up going down. I'm going to look at. I'm just looking at some comments here, folks. Yeah, just looking here. Oh, I just saw our friendly bot. This bot's been showing up. I'll get rid of that. Hang with me one second. Sorry about that. Guess not my fault, is it? Anyway, so yeah, so NASDAQ, all these markets turning around. Let's go over and think. Yeah, I have a lot of these loaded up here. So this is interesting because this is the 10-year note futures, and they're not forecasting for the PPMs to improve and that bond prices are going to rally. They're, in fact, suggesting more of a sideways range, which is what I was talking about. There might be a little blip, but we got right up to the 10 average. The 10 average is 111.30. The high 111.28 today. So we printed 28.30 seconds on the bond there and backed off a bit. We do have an outside day, but we'd have to close higher. We'd just have to close higher on the session today to get a reversal on the bond. So you can watch that. But right now, the algos are not saying that's what's going to happen from that standpoint. Another market that I talked about last night, we're just going to go through a bunch of stuff here, is XLE. XLE has been forecasted for just a little while here, and I'm bringing up on the other screen. I'll go through this here in a minute. I'm just bringing up our portfolio expert software. because I want you to see what's going on here. Bear with me, I'm just setting some things up here. Yeah, so we're seeing XLE explode, the PPMs. I'm going to do a really quick replay so you can see exactly what was going on when before. I'm just going to play this so you can see exactly what the algos were starting to project here. So there was a downtick here coming, and then you'll see if you watch the algos off on the right here. You'll see we actually got this 4 STX buy here, and that's where it came in. I'm going to stop right here. But you can see right before, I'm sorry, I was trying to get that stopped. I'm gonna restart this this replay real quick, because I'm going to start it right before we get to that low, so you can see and I'll pay attention here. So you see that coming into this low, all of the PPMs were being projected to go down, and then in prices here, you can see how the projections of the PPMs, it's crazy how accurate they are. And so now right here, when we got the 4 STX buy, and now look at the forecast. The forecast is saying everything's going to bottom, start to improve here. In fact, I can do a mouse over here, and it's saying that the PPMs are going to get up to at least a 0.36, which anything over 0.35 is a trend, uptrend. And so that's what it's forecasting. So I'll just let it run out here, and you'll see that the forecast even got stronger. And now the PPM's at minus 0.21. Now it's at 0.30. That's what it was forecast to go to. Now it's 0.68, 0.91, and we're 1.5. So this thing just exploded. And now it forecasts that, okay, so let's see. So what it's forecasting now, this is kind of the last hurrah, and we're going to get some downside, but the PPM is going to stay in trend mode, which means that the 10-period moving average is going to be a trend line. It's going to be a value that you can expect to hold, and you can watch his value pretty close. So that I wouldn't put a stop loss there. I would definitely put it, but I would be watching the prices and how they act along that range. So this is the same thing that has been going on. And when we go back and we go over to the S&P, this is the same type of situation. If I go back, and I'll just run this so you can see what's going on here. Let's start from this period here. And so right now PPMs are we just got that big reversal several weeks ago, almost up to the 200 there. And this is the one daily chart that we're looking at, and it's starting to project that the PPMs are going to start to weaken in the days to come. We get there's a little bit of a rally. Now there's a big weakness showing, and this is the forecast. Just going to stop here. This is showing, by the way, this is fib target 2, which will be hit. Matter of fact, fib target 3 was 459, 34.59. So this we're going to go through that just briefly today. But you can see it's projecting lower prices, and you can go out and look for the next 2 to 3 days, lower prices. Then it's saying things are going to start to flatten out and turn up. And this is what I've been talking about here on the channel. Okay, so we got one of those 4 STX buy signals. I believe we get. Okay, so right here I'll stop. So now we've gotten to, see, what day is this? The September 27th. I think I'm further down the trail than I thought that I was. So let's let this run for a minute. So now we're getting a setup for a rally again. Yeah, this is the secondary rally. This is the rally that we got up to the 21, then the reversal. You can see the forecast is changing slightly. Now it's showing that okay, so this brings us up to current. That's what I was trying to get to. So as we were coming down in this low, we were starting to see the forecast that we should start a bottoming pattern. We see the market grid starting to turn around here. And then what we get is the forecast is for at least one more day up, then a flattening, and then more acceleration down the road. Most likely, and I've been talking about this, that we need to challenge the 21 and the 40. I think these values are still pretty substantial. As if I switch this over to a weekly chart, you're going to see that the trends that are out there, and I'm trying to combine all this analysis. So what we're always trying to do is try to look into the future, not look at what's happening, try to anticipate what's going to happen next. And even on the weekly charts now, some weeks out in advance, it's suggesting that the market's going to move toward this 10-period moving average, which right now is 3,900, but it's 3,910 right now, but it's going down 50 handles per week. So it's going to be 3,850, 3,800 in the next 2 weeks. So by the time we go through 2 weeks, we're going to be 38, high 37, something like that. So this number is going to be pretty substantial. Even when it gets at its best being projected right now, it's basically saying that the 10 will be flat, and that should put us roughly down, like probably right where my cursor is now, 3780, 3790, something like that. And we can probably hone that in by going to a monthly chart. Let's just do it. Monthly expectations, we look at the market grid for monthly, and 3709 is R1. So far, we've had a high of 3820. 3830 was R2. So we may have already satisfied on a monthly basis, intra-month, we may have already satisfied that high. And this may be the bulk of the range that we've seen. And one of the things I've been talking about, folks, if you think about it, is that what we're really entering into a consolidation phase. And we come into the fourth quarter, I don't think we're going to make any really big decisions. I think markets are going to get somewhat very choppy, sideways, lots of volatility with, like we're already seeing, like, don't want to be Captain Obvious here, but that's what's going to continue to happen. And overall, we're going to stay within these big downtrends that are there. So this when somebody says this bear market rally, absolutely, it's a bear market rally. There's no doubt about that. And but it's keeping the context here is we start to look at some of these numbers. This is this downward 10 is down at 2.6. That's going that is dropping. Let's see if I can get an exact value here. 1 second. So the value is 4081. It's dropping just at 200 per month. So basically by the end of this month, it's going to be 3880. Okay, just rough numbers. So there's going to be the potential, and even looking at the market grid, 38.30 is R2. We've already printed that. We had a high of 38.20. So maybe we could rally back up, but we're probably actually, I'm just going to say this now, is that we're probably seeing the context within the month of October, and all we're going to see is a massive amount of volatility. Has anything changed? That's the thing I always ask myself on a day like today. Has anything changed with what's going on right now? Answer is no, it has not. Inflation is still high. The Fed's still going to be raising rates. We still have earnings season to start next week and start to kick off over the next several weeks, getting heavier. And expectations are maybe they're so bad that they end up being good. It's one of those scenarios that the collapse in earnings, maybe we get the collapse, but everybody goes, oh yeah, we already expected that. That's why we traded to 3,500. So that kind of mentality starts to come out of the markets as well. And until they go, I always say the market can't chew gum and walk at the same time. Markets tend to very narrowly focus on certain events. And there's probably, let's say, 3 events that they've been focusing in on, which is, watching the labor, watching the inflation, and basically watching what the Fed's doing. Those are the 3 big items out on the street right now. And so all of that's happening. And so, we still, I have a bit of an isolated view of the world because I focus on U.S. markets. I don't do a lot of international markets, but I've been getting folks on Twitter sending me some of this craziness that's going on in France with long energy lines, all that kind of stuff. It's pretty crazy. We did that in 1974. I remember sitting in lines. We're a little more civil than the French are right now, but we hadn't been locked down for 2 years and screwed with like the public has been for the last couple of years. Why us little minions are, being told what to do. So folks are getting pretty sick, and that's, I think, sorry to go on a little sidebar here, but I think the French are illustrating the frustration of the populace of the world right now, and just from a few clips that I've seen, I'm sure it's happening in other places. So it's just a very, very difficult environment that we're in right now. So coming back to my bubble I live in, which is the U.S., is this is probably setting up a pretty decent range already for the month. All these bars, the market grid, what it does here is actually makes an estimate of what the volatility looks like. And typically we have, and you folks hear this every day, we get an R1, S2, or S1, R2. It stays kind of in that range normally. Some higher volatility will get R2, S2. Example, today we exceeded STX and we've exceeded RTX all in the same day. How many times that happened? Somebody asked that, I think, early in the stream. I have no idea. Not very. I can say that. It's very isolated. In fact, it's only about 12% of the time that the markets will exceed RTX on one side or STX on any given day. So it's 90% of the time you'll see that, and you can see it here on this scale here. I go full screen, is that the markets stay within the 2 orange lines on the outside. Very seldom do we get outside of it, and it's very, very few bars. It's about 1 out of 10 that will happen, and that's virtually on every sequence. But we do get more. I think I'm running. So here was in this sequence over here, there was a 4 count, but there hasn't been any, and this is monthly. So that's pretty substantial from that standpoint. But yeah, so my point is that we probably are setting up the top end of the range. If we expanded this range and we went to an R3, that would be 39.50. Sounds kind of far-fetched. On the downside, where if you notice, S1 was 34.93 monthly. So we basically printed S1 this morning on the monthly. So the bottom end of this range was actually formed this month. Yeah, so I haven't been watching market. Let's go back over there. I just kind of want to set up some of these things because these are days. I call them days where you have to really be on top of stuff. So yeah, we did get a little dip here. Interesting enough, this is the 1 minute. So maybe we'll focus in on some trading here now. What time we're getting to be here? 11:30. Yeah. So let's try to focus in on some stuff. Let me look at some of your comments. Yeah, I'm just looking at some comments here real quick, folks. Okay, so let's yeah, so what's being projected right now? We've got 3 Fibonacci projections up here. They're right now the projections are 4. See if I can bring that up. 72, 75, 78. That's 36, 72, 75, 78. And we've got the algos are at least one is suggesting we're going to see getting back above the 10 and trying to move higher again in this pattern. And we did get this 4 STX buy signal right here. I'm really anxious when we've got some work to do on this particular indicator. I'm showing it in the live room. I'm talking about it here on the channel, but this is going to be coming out. There's a project we're looking at called Waytech Signals. So we're going to be getting some things out to really give you some hardcore stuff where you don't even need to do anything but follow these signals and validate them and do some things like that. But it's always handy to have these signals in conjunction with the PPMs and all that, and getting the entire suite of products there. So just remember, you can get that at kendallreport.com/indicators. And you also get 30 days of live room. So we're kind of doing a lot of stuff right now. I'm going through some of the things. I'm going to focus for the next, half hour or so. We're going to focus in on the markets and the movement. So like I said, you can see we just got an update on the 1 minute, and the 1 minute says that we've got, we're going to continue to see some improvement. We're back above the 10. That's what it was forecasting it was going to do. So if we were over here, it'll just take us a minute. So let's go ahead and do a replay just for coming into this low here. Okay. Just so we can see what the algos are kind of flat here. The 200 was actually starting to suggest we're going to go lower. Let's run the script a little bit here. So now you can see after the next down bar, the algos are starting to predict a little dip here, and we do have Fibonacci targets here. You can see the on the red over here on the right hand side where my cursor is it says low target 1, 36.67, 63.60. So as we're trading, and I'll set this up real time. I just want some of you folks haven't seen this. So we just hit 1, just got hit. Last trade is 67.25. That's fib target 1. Algos, there's fib target 2 getting hit. Fib target 2, 63. We just hit 63. And when we hit 63, I stopped it there. We have that was also a close under STX, and that was the 4th close under STX. I have it set so 4 or more will show. I can set the STX meter to how many of these sequences we want to find. We found that if you get five or more on the daily, that it's almost perfect. In fact, the June low was exactly 5 on the day of the June low was a 5. So we're trying to get this out. I think it's going to be at least another 30 days or so. But let's go ahead and run the script a little bit more so we can get live. So what's happening also, it's showing stability and starting to show some bars off in the future. And this is going to update as more information comes that it's going to start to turn up. So let's talk about that. This is what I was looking at when we were talking. We got a cycle low also on that 4 spot there. Let's go ahead and run it. Still kind of sideways. Now we're getting projections to the upside. I'm just going to let the script out till we're live here. So you can see it's still, we got the Fibonacci targets that I was talking about. Here we go. And and look what happened. We just hit Fib target 3 while I'm trying to show you the setup. Here was, and this is what I've been trading off of, folks. These things are deadly. So if we went back a couple bars, it was going to show that we're going to get a peak value here. And that typically where that peak value is, oftentimes is the high. But we saw market grid get into a channel. We saw everything that it was projecting happen, including going into these Fibonacci targets. Let me just get those targets that are up there. They were 75, 78. The high there was, I gotta move this. The high on this bar here, 76, 75. So went right in between Fib target 2 and 3. They're pretty tight. And now we're seeing, once again, we're seeing the pattern start to roll over here. Yeah, so I just see somebody asked what happened to Jay. Jay has moved on and got a job. I've been encouraging him to do so, and so so he's not with us anymore. He's still helping in the background, but he's not working day to day any longer. There's Mason is taking over there. Yeah, so I know this chat's a little bit behind what I'm saying there, but it's all good. He's doing excellent. So thanks for asking. But yeah, so let's watch his algo here. I don't think there's enough here. What's happening is it's flattening out. A lot of times we get a signal like this, like when we were over here earlier, 20 minutes ago or so. I said it looks like we're going to get a decline. Now it looks like we're softening, but there's something else going on here. The underlying, the 21, so we have to combine the thought process here. So we have 4 moving averages on this page. We have the 10, 21, 40, and the 200. And these are all simple averages. I know a lot of folks like to use weighted and exponential, all that, just simple. Simple has everything to do with when we developed WaveTech over 40 years ago, actually 38 years ago to be exact, I think now. But a long time ago. And what this is really about is it fits the patterns of Elliott really good. That WaveTech was a combination of moving averages, the PPMs, and Elliott theory. And so this is basically, and this has been in use for 38 years. Been trading with institutions myself, lots of funds, managers, everybody's been using this technology. But the concepts are that we have the short-term, intermediate, the 21 period moving average typically ends up to be the primary trend within here. So if I expand this out a little bit, we can see it. That is the the red line. Let me make this. Yeah, so you can see market grid. We just got a 1 minute update, and we're seeing that just what I was telling you. This 10-period moving average continues to be the what I call a demand line. When you have it right now, it's at a 0.18. As long as it stays above 0.15, it should be good. It's actually being projected a couple bars out to maintain that, and then start to fade just a little bit over the next few bars. But what this is setting up is a potential dragon head. So here's what we do. We want to go to the next chart. We want to go to a 5-minute chart. Let's get this scaling. So this is something that's pretty wild projections that are going on right now, but this is what's happening on the next level. Let me just try to get this scaling so it's decent, so it makes sense. Let me get rid of some things out of the way. Okay, so what we're looking at here is that we've got some downward projections here. The algos are saying that we're going into a choppy sideways range. Nothing is being predicted. The pattern itself is suggesting that we could come down to 44 again. That's back into this congestion we went earlier. The lower congestion was over here at 31. Fib target 2 is 26. So there is some negative patterns that are coming out, and we had a cycle low come in right on that bottom right there. So we'll see if that plays out. Right now, it looks like it is. So the 5 minutes not giving us any clue. So we'll go back to the 1, and like I said, the 1 is just projecting that we're going to stay above the 10. We're continuing to do that. Just got an RTX sell here on the 1 minute. So, and this was that mini dragon head, and dragon heads resolve themselves to the upside. And so we are seeing that surge, but it's saying that we're getting close to a peak in value. And if we look at this, I know I've got some strange names, folks. Those that have been in the live room are familiar with this, but this is the caterpillar. This is just nothing but volatility and noise. Out of that came a little dip. We're back into that noisy area here. And so you'll get rejected out of these values right now, and those are 79.50. We're trading 78, 75, 79. So we've got market grid suggesting R2 80, R3 81.35. So, and the algos are suggesting that we're going to flatten out here, and let's see what it's saying. It's actually never showing that the 10 is going to roll over. So what we would expect here is we're going to trade back into the 10 value at 75, 70, 77 here. We're already doing it as I'm just even talking about it. So we're starting to see that happen as we talk about it. So you can see just like I said, we're going to hold above this 10 here. So we'll continue to watch this 1 minute for a while. And folks, just put anything out there. Yeah, Jim, I just saw your comment from the live room. Yeah, if I said 0.35, I meant 0.25. So you can see we're starting to flatten out. Check this out, folks. This is, we do a lot of this in the live room, and just watching the predictions. I haven't done any trades. I'm not going to do any trades live on YouTube, but in the live room we set up some trades. So sacrificing some trading days here. Already traded early. We just got looks like we just got a cycle coming in here. There's a red dot showed up that says cycle low. So that's interesting. Look what's happening with PPM2, and this is what I was starting to explain. What happens with PPM2 is turning up, meaning this red line down here, right where the dot is, that line is going to start to trend up. So there's still an uptrend, and you can see we're getting a little bit of a bid coming back in, but the PPM2, that primary line, is going to come into play. I'm going to draw in something here so that you folks can see this, especially those of you that have not seen this type of concept before. So let's, this is what's likely to happen here. I'm just going to draw this. Okay, hang on. Now what's likely to happen is this is what I'm talking about. This line here, I'm just going to draw in the projection right now, is saying we're going to stay above the first derivative, which is a positive. This value is, it's already at a 0.21. It's just right at trend mode right now. And it says it's going to stall, but it's going to have this upward bias. And we're also seeing here, I'm going to draw in that we just got an update. The PPM1 is starting to project some higher prices as well. So this angle of attack here on these moving averages is the 10 and 21 are up. That's your trend right there. And then this right over here, let me get a line similar color. This is what's going to happen here, which is crazy, because what this is suggesting that all of these averages are going to turn up, and down here below, I'm drawing in on PPM3 down here. I'm drawing in what's happening there, and it's projecting to go to trend mode. And folks, we're up, what? I don't have a screen. I can see what we're up, but we're up 2.8%, and we're starting to get a trend to evolve here. So anyway, I wanted to draw that in while that was happening. So we get right up to RTX here. I'm going to go over to the 5 minutes. I can find it. Yeah, so let's take a look at the 5 minute. We are what? We just got an update, so pretty timely. But we have objectives, live objectives up here right now with three targets, and they are 37.18, 37. It's even hard to say these. 37.39 and 37.53. These are the targets. Doesn't mean they're going to get hit, but this is projecting. The 5 minute is kind of yawning at this current pattern that we're seeing set up on a 1, saying that we're probably going to peak out here. We did print up here at, let me get to so I can see the values. We did peak over here at 80. What was that? 87. So we're just now trading again 82. So this might be just a retest, but it is showing we got a cycle low spot on that last low bar, but the PPMs aren't looking to get very positive here on the 5. There's a chart I don't have up here, but I'm going to have up there right now. Is I'm going to put up the hourly graph. Yeah, this is mind-boggling. Okay, I don't know what else to say. So this is the crazy volatility that we had. Let's run the script on this thing. I want to see what was going on here earlier. Let's just run the script. This is from last night. It's an hourly, so it won't take us too long. But let's just run this. Because we're going to get into this crazy volatility. I'm going to pause it as soon as we get there. So it was interesting. We were starting to show, the hourly was showing, what time is this? 4 a.m. this morning, my time, which is Pacific time. And that was showing that we were going to improve a little bit. And then we got, look at this, then we got the big shock wave to hit. And this is where, let's see what happens to the algos after this thing hits. Boom. Okay, so next, as soon as that came in, they started to, they reacted, and then they were showing some uptick for the next hour or two, which we know that's what happened. So they were actually projecting the uptick, but this is just so drastic volatility. I'm just curious what. And then they started showing some downward. Okay, we're already live. So now what they're showing is that we're stalling here, and maybe there's another uptick. So I just want to explain something, especially those of you that have these indicators, or if you're considering getting them, is what happens when you get it. This is a shock to the system. We actually built something kind of cool into this for gaps on intraday charts. We actually built something in here, and where if there's any gaps, you can remove them and normalize the data. So put a fair amount of effort into that and trying to normalize data. And what we're seeing here is this bar, especially this is a ppm on a 10-period moving average on hourly. It picks up this volatility. What we're seeing here is 10 bars out, there's an echo of that. So if any of you mathematicians out there know what we're talking about. So this bar is the best way that I try to explain this type of situation when a market does this. It's sort of like you have everything flowing along. It's like looking at a lake, or let's say a pond is a better example. And it's just kind of got a little ripples, the winds got a little normalcy, whatever's normal in that. And then all of a sudden somebody throws a big rock in the middle and it causes this big wake, and it comes across the lake, and then it has to normalize again. And all of these bars, it'll take, each one is based upon a different moving average, 10, 21, 40. So you see that blip on all of them, and then you see almost the algos are suggesting that there's going to be a stabilization. But this is what's insane about this, and I'll go back full screen, is that what they're saying is they're stabilizing at a plus 2% per bar is what that 10-period moving average is moving at. So the trend is huge, and the fact that it's turning down or anything doesn't mean anything, because it's maintaining well over almost 1.5% per bar on this. And what that's telling you is there's a probability map that's out there in the masterclass I put together for the indicators, and it shows you exactly what the probability map basically says this, that at this kind of value, the probability of dropping below that moving average, the value of the 10-period moving average is less than 10%. So it's if someone told you that 9 times out of 10 it was going to hold that value, what would you do there? Exactly. You would buy, you would sell, whatever the angle of attack was. So this is what this is saying, is that's going to be the case. Well, once it normalizes, it's still going out 10 bars. This is a projection for 10 bars. Going out 10 bars at the moment. This is going to change over time as real values come in. But at the moment, it's still saying we're going to be in trend mode. And this is on an hourly graph. And there's been some amazing big-time trade setups off of the projections of what was being expected on the hourly chart. And even this morning when we just ran the script there was some projections for it to move up. But I mean, move up, I don't know if you can call that a move up. That was, an explosion, right? It was literally when people put the little rocket ships that's to the moon, that was a to the moon trade. There's no doubt. But the point is, you can see how that echo, right now you're seeing the initial event, and then there's what's being projected out in the future is the echo. So if you look here, matter of fact, let me draw this in, because this is a really big concept. Let me go full screen. This is a big concept. So for those of you that have the indicators, this is really big to understand. I just wanted you to see this. So this is the event I'm talking about. This is the big spike in prices. But what I want you to see on each one of these as we go out here, you'll see the echo in the shortest one shows a bigger echo. Look what happens here. We just have this little ellipse kind of setting up, and we get stability for even, the longer you go. So this here is basic on a 10 SMA. This one here is a 21 SMA, and then this is the 40. And then this is the 200. And if you notice, the longer it goes, that the echo response is different and lesser. So this is the reason why you use a multivariant approach here, because it's important to understand the shortest term indicator is going to give you the most noise. It's going to present some confusion. So even in our trading models that we built, the trading models will alternate on rules between these different PPMs and different setups. There's about 60 basic setups, almost 600 variables that it's considering. And what we did is we built these maps that will migrate and say, hey, 10-period moving average was great in the beginning, but now we need we need to go to the 21 or the intermediate mode, and that's where we want to be from the standpoint of understanding what's going on within the trend. And so you can see as you go out these longer events, everything normalizes in a different kind of way. Just that very short-term indicator is where you're going to get that big echo, secondary echo. So this is probably all noise that's showing up. If we were to hang out for another 5 or 6 hours, which we're not going to, we would see that. Those of you that have the indicators, you'll see when we reopen on the futures tonight, you'll see, you can watch this predictive methodology that's going on. But the bottom line is what it's saying is there is a multi-day trend that is setting up. It goes to the 3-day trade that I mentioned earlier on when we first started talking and I came live. So those things are pretty predominant here on what's going on. So let me can all this and let's get back to kind of going back to real time and see where things have emerged. Wow. Yeah. So what did we do? We printed a new high to 94 while I'm doing that. So maybe I get into some education, but this is important, and this all came from from what I was talking about just now. This all came from this 21. This was that. Look what we just did. We just traded through the 10 down to the 21. So this is on a 1 minute, and this 21 was projecting. I was showing you. I drew it in that we're going to get this range. We also got basically on the high bar, we had a cycle come in there. We got PPM 1 projecting lower. It's already going lower. It's already traded down into, we just got an update here, just traded down into toward the 21. And we look at the market grid, we're probably in a classic, what I talk about is a sandwich job, which you get sandwiched between the 21 period moving average and the 10 is going to be your kind of a very short-term trading range. That's 1 minute chart, so that's going to be easy to watch. But the PPM 1 is saying this thing's in it, that the 10, let me just see what the focus is, that the 10 is going to actually roll over. So it says that we're likely on a closing basis, we're going to stay under the 10 here. And we're going to see even the PPM 2 is starting to flow over. PPM 3, which is, like I was just explaining to you, is on the longer side of the spectrum. That's this cyan line down here. It is still showing that it's going to keep moving up. So that ultimately, if we do break through the 21, somewhere down in here, we'll probably get some Fibonacci targets. We just got cycles hitting again. There's a lot of little short-term cycles hitting on this 1 minute graph, but we're seeing looks like PPM 2 and 1 are starting to project lower. PPM 3 is stabilizing, but still in positive mode. It's right now, PPM 3 is at 0.09, so it's very, very slight upslope right now. And the entire theory, if you're new hanging out here with me, if you're new to what the theory is that the angle of attack or the angle of the moving average tells you whether, everybody uses moving averages. Most everyone, I hate global labeling. Most everyone uses moving averages. The problem is no one spent any time like myself and Dr. Prater did back in the 80s and figure out what are the likelihood. I remember Bill and I, we'd look at moving averages and go, why did it go through that time? Last time it didn't. We just asked the question, and we wanted to figure out when a moving average was going to be a valid trend line, when it was going to break, when was it in trend mode, what were the different elements, and that's where we came up with this probability map. We built that between 84 and 1986. This has driven my entire 43-year career, going back to a lot of these theories that we did. Bill moved on, okay? I didn't. I just thought this was everything I needed to know, understanding the markets, and that's what I've been doing. I built this into our software platforms. I built 3 different software platforms over the last several years. So we just got still getting little cycles. Look what's happening here. PPM, we got an update here. Just keep watching this. We got an update, and PPM 1 is now negative. PPM 2 is still up 0.10, but you can see it's starting to roll a little bit. We're getting a lot of cycles coming in here. All of a sudden, clusters of cycles coming around. And so looks like we have at least 2 or 3 more bars of sideways in here. And we, like I said, we printed all the way up to 94. So the old highs were 87, and we printed to 94. So we got, that was really a very nice trend there. And when we went, this is, let's just talk about what happened here. It's going all the way back, and we were live when this happened. This 4 STX buy signal came in. PPM started forecasting that the moving averages were going to start to turn up and have an angle of attack, therefore a trend up. They did that across the board. And now what we have, the longest one, the 200-day that's way down here, is starting to stabilize at the moment, and it's still positive. So literally, it wouldn't seem like the 200 would have much to do with anything, but there's some really good clues on continuing trends. And we're looking at a 1 minute chart here. So this is a 200-minute moving average. But the point is that, we got these cycles coming in. it's now showing us that this is exactly what we were talking about. PPM2 is still at 0.1324. About 1.5 is the minimum, but we traded down. Let's just take a look and see what happened. We now have just got an update here on the 1 minute, and we're seeing an upward channel form on this market, and it looks like we're trying to potentially challenge the highs again. But what happened here is we got down to the low was 86, the 21 was 85.17, and it was at the time it was at a value of about 14. So we came down to the backside of the moving average. I told you the angle, we'd get sandwiched between the 10 and the 21. And here we go. We just made a new high. We just printed 95 here, folks. So this thing is continuing. And I got to bring this down so you can see this. There are 3 off the 1 minute chart right now. And this happened 3 minutes ago, 4 minutes ago. Just got an update. We're getting projections now for 37.06, 37.14, 37.19. So we're looking like we're gonna challenge the 37 handle. What time? We get 12:08, final hour coming in. So this is a big deal, and I think let's go over to the 5 minute here. 5 minute has we'll just go with fib target 1, 17. So we have a 37.14 on fib target 3 on the 1 minute, and the 5 minute is showing us a 37.17 target right now. And we're seeing the algos are finally starting to project that, yeah, this is a big number. I think I talked about this when we went through the 5. That angle of attack here, the 10, was going to stay positive. That's what's happening. It's just keeping a positive tone. We're trading RXT roughly right now. Let's see where we are. RXT 36.95.67. Last trade 36.95.50. The high was 6.25. So we just traded our RTX on the 5 and 96.50, 90. Yeah, we're bouncing around up here at these levels. So that's pretty interesting patterns here. Some nice people in the world, huh, folks? Oh, no, I am. I just it's probably my ex-wife. That's pretty funny. Yeah, but she doesn't want me to fail because she still wants my money. So that's pretty funny. All right. Yeah, so let's go over to TradeStation here. Let's get a view of what's going on in the world, folks. I know it's super funny. Anyway, I have to get my head back in the game after that. All right, back to serious. Okay, so let's take a look at what's going on here. So 10 years kind of stabilized, 395. We've got 393 on the 30. The fives 420, and the 13 week is at 3.58. Yeah, these are, and here we are up 3%, 96.25, trading the highs. This is big time stuff. I still think it's crazy. I've talked to you about it. I just happen to have the 10-year that we're looking at on the screen here. And still get that crazy value up here. This is a weekly target. I've showed you the daily target. The weekly target's 464, 533. That's just the fib target 1 and 2 here. Let's go over and take a look here. Yeah, so this is chances are that guy faded me last night. He went short. Yeah, that's pretty funny, or whoever it was, huh? All right, let's take a quick look. I want to bounce back over. I want to put the 10-year futures up here. Yeah, still in that range. Like I said, not exciting. It looks like the 10-year is trying to stabilize, but there's still some downside here. And we had just like on the S&P, there's a crazy range in the bond market as well on the 10-year, because we're looking at right now STX was 110.19. We printed low at 110.02, so we printed 18 ticks below it, and then we had the RXT as 112.12. We had a high of 111.28. Let me just see here. Yeah, we didn't quite make RXT here. Close to it, though. So we're a little shy, but we did get up to the 10-period moving average, which is right now 111.30. So we got 111.28.5. Yeah, so we did get there. We didn't quite hit the RXT. So what is the Kramer inverse doing? Anyway, all right. So let's go back to TradeStation here. Just kind of talk a little bit about what's going on. We got 45 minutes to go in this pattern. In the session, once again, that 200-week moving average. This has been an. Let's discuss that for a minute. Let me get off screen here. Let's discuss something. Yeah, look at this. We're at 90 now on the S&P, so we're backing up just a little bit, and it's hard to decide what to focus on right now. Mostly, Eric, on your question on algorithms calculating exhaustion, that has more to do. Exhaustion is really targeting where you're targeting the extremes in the pattern, and the market grid, the Fib projections give you some pretty good guidance right there. Did he really buy Credit Suisse? Is that good? Here's the Credit Suisse chart. Anyway. Yeah, I'm just reading some of your comments here, folks. Okay, so let's go back with the market's about 40 minutes out. Let's go back to taking a look at what's going on. Indicators are starting to flatten out a little bit here. We've got some downward targets at the moment, setting up for 88, 88.50, 84.97, 82.78. The 21 period moving average, 36.92. The it's only up at a 0.04, so it's vulnerable to the downside. Now, this is kind of interesting, folks. So this 1 minute graph again, and really what we're setting up here is what we're setting up where we're getting a rollover. We're going to actually, for the first time in this entire sequence, we should test the 40 period moving average. The algos are starting to show that we're going to get a little bit more strength coming in here. We'll see how it holds, but we should ultimately just go down to this cyan line. That's not a big deal. It's 94 even is the number. I mean, we're not even that big a deal. Let me get this right. Let me get this right value. No, that's the market grid number. Let me get the right number. 87 is the 40, and 87 is the old high. So we theoretically can drop back to the 87 level, and we'll see how these things set up. We'll stay here and watch this for a few minutes. Yeah, so you have any questions, just throw them out there. Yeah, we'll hang out to the close, and we should be able to yeah, Dom. Thanks for the super chat. Love what you do daily. Don't use software yet. Does your algo say if the trend continues for a few days, or is that too far out? No, actually, it does help for the next several days, because we were looking at the turn coming in for the last couple of days, looking for some sort of pattern here. And yeah. Yeah, you just see the dotted lines exactly. That's where it's being projected. So it's kind of grayed out. So we just got, look at this. We went, while I was trying to read that, we bounced right down. The 40 is 36.88. The low went to 36.87.75, and then we got a bit of a bounce off of that level. Another cycle coming in. What's interesting is these upward targets up here, up at the top, folks, are still valid. They're still suggesting that we could trade up above the 37 handle. Sounds crazy, but with a day like this, let's do something I always do on. Let's get something up here. I just want you folks to have benefit. So what we want to do here is we'll continue to watch the 1 minute chart, and I'm going to get off screen. And what I have up here is the liquidity graph. We have time and sales coming in, and we also have the level 2 over on the side, and then we have the algos and all the trading view stuff on the other side of the screen. And this is typically a trading setup here, and I want you to see how the order book looks, and we haven't spent a lot of time with this. And those of you who've been around in the live room know that I read the order book. I spent a lot of years on trading floors. I still see, I can almost see that every bid ask it like some broker or some person standing in the pit. Yeah, so, and we'll listen, but at the end of this session today, we'll go over that three bar trade, okay? Maybe I'll clip this out at the end of today. I've been telling you folks I'm going to do something. We'll just do something live, see how it works out. Yeah, so let's take a look here. We're trading down below. Everything's starting to roll over. Look at this. PPM 1 and 2 are, excuse me. Yeah, PPM 1 and 2 are starting to show we're rolling over. PPM 2 is suggesting it's going to roll negative, which we're trading below it. Look at the PPM 3 now. It is actually saying all the moving averages are going to roll here. So what we should see, certain values, like if we get below 84, if we print below 84, these fib projections on the upside will cease to exist anymore. They'll stop calculating. We just got another cycle. We keep getting these cycles through here, and normally I don't run the cycle finder on a 1 minute. It's kind of interesting. I've got it up here, and there's a bunch of other stuff I could show you guys, but I want to stay focused on the markets right now. Yeah, so someone asked about RTXL, which looks like we will get one today. RTXLs don't carry the same weight as the STXs do, we have found. But having said that, it typically means that we've hit some climactic number and that the patterns that unfold over the next couple of days will be somewhat muted. I'll cover all this at the end of the session. And plus, I'll be live tonight and we'll do it there. So I'm glad I decided to go live here today. And I did a lot of stuff. So those of you folks that are normally in the live room, we did a lot of stuff, just didn't do any live trades. Everything else is pretty much static there. Oh, yeah. Yeah, I see some conversation going on here. Didn't realize to delete and add them back. Yeah, that's a trading view situation. If you haven't cleared your cookies as well on TradingView, since it's an HTML5 platform and it's a database platform, they store everything and do everything through cookies. And their cookies are fairly robust that they store things in. And when even if you close TradingView and come back in, they re-deliver those cookies that are stored on their server side. Okay. We do some of that stuff in our Portfolio Expert product. So that happens. So you literally have to delete the indicators in some case and then put them back on, and you'll get the predictive models. So, okay, so we're already starting to see some stabilization in PPM1, but it's still saying that we should really stay just around the 10 here. 89, 90 is going to be the top end of this range. And what's being projected here on the 21 is it's going to start to push down. Here we're starting getting a push here. And I got my finger on the trigger. I want to get short this thing here. But so the PPM3 is the most really suggesting that the cyan line, let me blow this up so we can see this. We don't need that upward projection anymore. Let's move this around just a little bit. So you can see we got, this one was something I was talking about. We'd start to get these downward projections. We have downward projections right now on the, for 86.75, which we're printed, and then 83.20 and 81 even. So we printed 84, so this is right at the level we start to negate that upward projections. We're starting to roll a little bit. This is going to get interesting here, folks, in the next half hour. See who wants to stay along this stuff. This will tell us a lot of the character of what's going on. Yeah, folks, keep hanging out. We got some really cool stuff cooking in the background. Yeah, so we're seeing this. What the algos were telling us is that we're going to roll over back when we were in the 90s. Now we're 84. There's actually like I said, there's a really good short up there. I hate being live on YouTube. From that aspect, no trading. But the bottom line is PPM 1 is trying to stabilize, but it's still, I mean, it's suggesting we're going to stay in trend mode down. So right where it's at, let me get you a value, is 36.86 is now a bit of resistance here. Looks like the 21 is going to continue to roll over. That's the red line. It's about to cross through the 40. And I know a lot of folks talk about, like I mentioned yesterday, that the is going to come up this way. Yesterday, like the Golden Cross thing is such a bunch of BS. It's like we ran the algo on that thing. It's terrible. It doesn't do anything. But my view, like right now, we just got a crossover of the 10 and the 40. Typically, that starts to set up a bottom, just a very small bottom. And there's a pattern that's on the screen right now, going full screen so you can see it, is what it is. It's this, I call it a bubble bottom. So we're starting to round out. We're seeing that all of a sudden the algos are starting to suggest, at least on PPM 2 and 1, that we're going to stabilize here. And we're trading right at the 10, right at that value I told you, this 86, 50, 87 That's where your resistance is. We're trading almost RTX on this is 1 minute. Let's flop over and take a look at the 5. Here we go on the 5. We had some downward projections. The 5. This is actually. I'm glad we looked at this. We always kind of flopping back and forth between the 5 and the 1, and this suggests that we got some brand new downward projections here, and let me give you those numbers: 72, 72.25, 62.56. That's a big move. That's dang near 50 handles off the highs. Got a cycle coming in as well. PPM1 is starting to forecast that we're going to be down 0.82. Don't know if that'll happen, but what it's saying is, let me expand this scale just a little bit so we can see it. That actually, there's a couple patterns here. And I'm going to come over here so you can see it a little better for a second here. I'm going to bring up TradeStation. But this right here, this pattern is setting up on this 5-minute chart, is starting to set up what we call a veil. And you can also see here, this is the same thing, market grid. This is just different platform on TradeStation. Look at this selling that's coming in. This is exactly what it's telling us. This thing is going to roll here big time. We're trading 79s. We're starting to get down to some of those objectives down there. Let's go back over there. Because the minimum objective here is 72. So we're definitely seeing this selling coming in. Algos are all predicting that this is what's going on. Back to the 1. Look at the 1. We just rolled over big time. We're almost to the 200. And the 200 right now is at 72, right where the Fed projection on the 5 is. Very interesting setup. The 1 is saying we're going to stabilize in here. There's probably a play off this 200. Look at this selling, man. Just coming in here. You just got an update on the 1. The interesting thing is, algos are trying to stabilize and actually telling us that we have a shot at trading back to the 83. So you probably is a trade off this 72 all the way back to 83. They're already bouncing this thing as I'm saying it. So like I said, you guys should join. Come to the live room, get the indicators, just get in there. Yeah, awesome. Bank math, awesome. Awesome. Love it. So this is stuff basically I wanted to share with everybody and be live here while we're trading so we could really talk about what's going on. Market grid just turned up here on the 1. Algos are stabilizing here right above the 200. That 200 is magical, folks, on a 1-minute chart. Especially with the indicators, it's just amazing. We've made so many amazing trades off the 200 on a 5-minute and on the also on the off the 1 minute. The 1, 5, 200s are magic. That's all I can tell you. You get these setups like this, you start to get and we'll see if we can hold here. We've got probably 3 or 4 more bars, and if you recall, let's go to the 5-minute here, as we do have further projections down to 62 handle and then 56. So right now, all of the PPMs on the 5 are they're rolling big time. There's lots of downward pressure here. And like I said, we also have this right here. I'm going to bring you back over here. This is what we call a veil top on and it gets like all these webs. These are the WaveTech webs. They roll over. We get this web. Also, we've got the 1 minute going in and out of a rope when they get really tight. When the webs get really tight, we call that a rope. We got a little blip here in the rope, and now we're we're forming another rope to the downside. So we may see this 62.56 out of here, folks. There may be some sanity in this day yet. And like I said, we're going to find out a lot about the characteristics of what this market is going to be like as we come into where we at here, 25 to go. And what we'll do here, folks, so I appreciate everybody showing up. We got about 400 live watching, probably been a lot more, probably over 1,000 have visited over the time. Yeah, I'm just reading some comments here. Yeah, Eric, that's cool. Listen, you know, we're trading down to 72. These patterns are breaking down, and like I said, get the indicators, come into the live room. We do it only 3 days a week because it's all I got for you. I have multiple things going on. I'm working on 2 continents right now, so it's very, very exhausting at the moment. So, but that's okay. Some exciting things. The 1 minute is trying to get into a rope here on this screen, and liquidity has kind of come back a little bit on this selling. Not a lot, but we still have this. So we're getting a little bounce here. Let's go over and take a look at the algos and see what's going on there. Let's go to that 1 minute. Okay, so look at this. Here's the 200. We close right on it. We're bouncing on it, darn thing. Algos are saying we're going to improve here. We're going to come back into the range, probably head back to 84, 82, 84. It would be the target. But like I said, this 72 level, what was the lows here? 73, 73. Yeah, 73's right there against the 200 moving average was 73.48. The low 73 even. I mean, spot on. Algos are still got a little work to do in here, but they're starting to show that we're going to stabilize right around this 200. I'm telling you. I told you this thing is magical. We've had so many good trades off of that. And even the trade expecting to go down to it, everything was projecting that to happen, okay? And, you know, what I'm doing here today is, like I said, a lot of what I do in the live room is trying to show you how these setups happen, how to anticipate and be a couple steps ahead. You got to play this like a chess game. You can't play it like checkers, okay? You got to play chess. You got to be a couple steps ahead. We didn't do a lot of trade setups or swing trade setups, so we have a couple different types of things where we're doing scalping. Today, especially since after I came live at 1:30, scalping would have been the best strategy. And then, but some days we get some great swing trades because of volatility. There's 10, 15 handle plus moves in here, just intraday doing some swing trades off, 5-minute charts. It's insane. But so here's what we're looking at. So let's walk this through. We're coming into the close. We'll see if we get a setup here. I'm going to be flashing back and forth. The 5-minute is there's still some negative connotations here. And as far as this goes, I just want to get the scaling so we can see it a little better here. Yeah, so what we're looking at is still have some downward projections. The algos are still projecting another leg down, okay, on a 5-minute. They're still saying there's some more potential selling coming in here. So we'll kind of flash back and forth here on the 5 and the 1. We're back to the 1. The 1 starting, the 1 saying we're going to hold this 200, and that's still okay with the 5, trying to reconcile how the 1 and 5 work together, is that's okay for this kind of, we'll say a little conflict. But we're sitting here right now, just the one thing that isn't encouraging on this chart is that PPM2 is suggesting it's going to stay negative. So it's going to be a resistance overhead. So there's not much of a trade-off of this 200. It's not a great setup. So there is a bias to the downside potentially here. But here we are right now. We're starting to bounce. Like I said, we just got a cycle coming in on the one. I've never seen this many cycles. I think it's because of all of the volatility that we have today. But the bottom line is we're looking at this. Algo is suggesting that this is what it was saying it was going to turn up. We're going to get some bias to the upside. The update on the PPM2 on the 1 minute is suggesting a little better forecast. And still, we're fighting and struggling to stay over this 200. And 200 is just flat. It's still up, but it's still flat. So we're going from a red bar to a green bar right now. I know a lot of you folks, if I put this on, let's see, if I go to candles, I know a lot of you folks would love that, but I just don't. It's so much easier for me because this is important. I think some folks that have been in the live room have come around a little bit. The reason why I use just standard bars, I want to be able to really see just the ranges. I don't care about those other formations. They're not important to me. Whether there's an engulfing pattern or doji, I don't care. Just, all I'm interested in prices. Look what we just did. The algo's just updated. It went exactly pretty much where the algo was saying. Markets are improving. PPM2 is really still not promoting a lot, but easily we're getting up at RXT on the one here. Let's take a look at the 5 minutes trying to stabilize just above the 40. So let me explain something really quick, and hopefully I won't get too far off track so we lose track of what's going on with the markets. But the reason why 1 in 5, so everything I do, the daily, weekly, monthly, and the averages 10, 21, 40, 200, all of those calculate and they resonate on different time variants. So when you're using a multivariant approach, you have the 40 period on the daily is equal to the 10 week on the weekly. The 40 week on the 40 week average is equal to the 10 month moving average. So there's a correlation of the charts that starts to happen. And when you see me go through some of these sequences, when you're trying to reconcile multi-level analysis where you're saying, okay, the daily's telling me this and the weekly's this and monthly's this. Is there any conflicts? Like we just had where the 1 minute was saying this thing's going to turn around. Right now, the 1 minute was the key to a little bit of a turnaround. We just got an update literally just a second ago on this 5 minute, and we see the market grid turn up. We have another cycle coming in, and we have a PPM still flat. So they're not saying, they're not confirming that we're going to go up much. We're just really in the trading range right now, and I'm calling it between the 40 period on the 5 minute and the 10 is probably a trading range right now. And those ranges right now are 73.81. Is that right? No, 73.86. So that's kind of the range. And if we look at the market grid on the 5 minute, we're looking at 86 is R1, S2 is 78, all the way down STX is the lower end 73.50. So you're always looking for some kind of correlation of the thoughts. So I'm always sharing my thoughts and trying to get you folks to understand how to actually look at these markets and correlate them. 5 minutes, fine. Sometimes we'll bring in the hourly. People, a lot of folks like to use a 15, even a 30. It's whatever you figure out that works is fine. I just use 1 in 5 because the 40 on the 1 is equals somewhat to the 10 on the 5, and there's a correlation on these different levels, so I can take my analysis and say, okay, short term, I'm looking for the next 3 to 5 bars to go up on the 1. What does that mean for the 5 minute? Is that going to change the forecast or my views on the 5 minute? And you're always updating when this is a lot of work, folks. To spend, at least I get to sit down, although I'm not sure that's that good anymore, is that, we used to have to stand up all day to do this stuff. And so, but you have to be thinking about every little element that's going. If you think you're just going to gradually go get a cup of coffee, leave the room, come back, it's not going to happen. You've really got to be pretty intense and watching all these ticks. So I just worry when I diverge on these little rants like this. But we're trading right at the 10 on the 5. We'll go back to the 1, see what kind of forecast. We're getting peak forecast here on the 1 again, right at that level I just talked about, that high, where we at high 68.50. So 5 saying this is probably the peak here. So we'll see if this was just retracement rally. What time we got? Just looking at time, 47. So we're down into the last 10 minutes, right? So it doesn't look like a big rollover, but let's take a look over here at the 5 real quick. Nothing. Yeah, it's really touch and go. I think it's a coin flip, but the 1 minute is starting to suggest we're going to see a potential. Really, it's really not. You can see the forecast here that I have on the screen. I'm moving my cursor on it. Even at the worst forecast coming down to the second derivatives, it's still a positive upslope on the 10. So the 10 average right now is at 83.95. That's your very short-term support. We're trying to trade back to it right now. Trading 87. Getting a few bars. We just traded S1. We look at the market grid. S1 87.50, R2 90. We had a high of 87. Actually, R2 just got an update here. R2 now 88 is R1. S1 86, 85 S2, and the 10 period moving average right now is at 83. Which is STX. This is interesting. STX on the 1 minute is the 10. Yeah, so the forecast is for the next, what do we got? 11 minutes to go. The next 11 minutes says the short term is that the 10 is going to flatten out here. We just stuck it out. Look at that update. We got that was forecasting right there at that high bar. It was forecasted that top tick. I've been nailing trades off of this where 2 bars out, as soon as we get to that bar, I'm selling that bar based on that we're going to get a downtick and with a very, very tight tolerance on the trade. Here we are trading back down, heading back towards the 200. This is 1 minute has been spot on. Sometimes the 5 minutes really not giving much guidance, but the 1 minute is on. Let's see here. Now we have a cycle here. We don't have any projections, any live projections off of the patterns on the 1s right now. And I just tell you folks, listen, I've been using all of these techniques for a long time, and having these Fibonacci's and everything being drawn on live on screen for me, is you can't do all this stuff on your own. You've got to have a certain amount of your process actually automated, and you just have to know how to read it. This is more of a discretionary environment that we're operating in. So look at this. We got down and we got reversed right back to the 10. And the 10 is what? It's at plus 0.1453. So we rebounded right above it. So we're down to 8.5 minutes, roughly. Yeah, 8.5. So let's flop over to the 5. Just take a look here. Very stable. Everything says stable on the 5. We had some downward projections. We traded into the moving average configuration. Just trying to see if there's any way to figure out what's going to happen here in the last few minutes. Looks like they want to own them right now. I'm not seeing any mass exit here. Look at this. We just got this last update, folks. We got new fib targets down here. 73, 66, 62 again just came in. PPM1 is saying we're going to roll a little bit. See if we can get under the 10. The 10 right now is 3685.75. We're trading 87.50, so we're a couple over that. So we're coming into where's trading stocks at, man? Oh, there it is. Moon Cactus, yeah, 10 rigged. I got a feeling that might be the same guy. Yeah, so we're getting a little bit of a bid here. And now it's, if you notice, the forecast updated in, this is the 1 minute, changed a little bit from this drastic down. Now it's stable. So that little burst up, we're staying above the 10. Somebody wanted to, here's the hourly chart. Christoph, this is for you. This is hourly range. It's saying we're going to flatten off here a little bit, so would make sense, right? Let's take a look at market grid here. 98.50 was R1 this hour. We got up to 97.75, so pretty much a hit there. And on S1, 83, low 73. S2 hourly was 74.33. So that was a pretty good setup for this last hour here. Yeah, we should get some kind of setup here. Now we'll stay with them 1 minute and hopefully remind me to go through the potential setup here on the 1 minute, okay? And it will tie together with the 3-day trade. So this is the plan. Markets close. I will come up. I wish I had I'll be back screen. I don't think I have one of those, like a 5-minute break. And then what we'll do is we'll go through and we'll look at the 3-day trade, and then we're going to correlate that with some of the ideas that I already see coming out of this hourly chart here. So PPM1 on the 1 minute saying we're peaking out again. We're starting to get, here we are testing the 10. There's still some upward flow here. The 21 is going to be pretty solid here. We went through the 10. 21's next. Just want to make sure we don't have any projections coming in here. So we went right to the 40. Yeah, we should stabilize in here. I'm just going over here. We still have these downward projections on the 10, but some of the patterns here aren't as drastic as they felt earlier from that standpoint. Just trying to get this scaled out. So we're seeing a little bit of, let's see if we get any profit taking after a day like this, right? Back to the 1. Okay, we're trading down towards the 21. We still have those live targets on the downside there. Yeah, here we are to the down to the 21, testing it. It's still got a reasonable 0.1357. But I think all bets are off here in, what do we got? We're in the last 3.5 minutes. Here we go. Yeah, just got a 1 minute update. This chart here tells us how long we got. 2 minutes, 55 seconds to go. Yeah, hopefully we get some fun here. Yeah, so far, very, very stable. We're close enough right now, folks. If there was going to be some big mass hit, maybe it'll come in at the close. I actually want to do something here. I want us to be able to watch this order book, see what kind of liquidity's increased a little bit. We're coming in almost to the final minute. I remember back in the day when there would be 1,000 contracts on each side of this. Right now we got 70 by 100, and we'll see what we get here. Listen, if we were going to sell off, that would have already happened. Sometimes we'll sell off after the close, but this would already be a thing. So pretty much all the indicators are reasonably stable in here. We've got, we do have some downward projections that came into play here. 84, 80, 78 on the 1 minute. So that's like one order to get to 80, one decent size order. So here we go, folks. This is a final minute. So what I say, 82, 84, 80, 78 is in the projections right now. There's 80. We're back on. We traded down to RTX. RTX was 81.25. The low was 80.75. Yeah, pretty darn stable here. Little bit of selling coming in here. 80.78 is the downward projection here. We also have the 200 coming in right here at 77.50. I'd call this pretty dang stable, folks. This is my favorite part of the day to watch, is how we act around this close. The 2 minutes up to it and the 2 minutes after. So we'll stay with this for a couple of minutes and see what happens. Normally what's going on here right now is that the institutions are squaring up, the ETFs, mutual funds. Anybody wants to square books. I used to work in a Delta mutual fund. We would do a lot of trading, and literally, usually in the last 10 minutes, trying to square up and try to come in the next day neutral as we could. Back in those days, there was no overnight market to speak of, and so we had to get pretty squared up coming into the next session. Yeah. Stable as she goes. That was it. I mean, I would call that crazy stable, especially trading 83. This is above the 10-pair moving average. This big time reversal, so we get to do the 3-day trade. We can do that setup. Yeah, so I see somebody asking, does bouncing off the worst case news indicate that we're at a bottom? No. Um, no, not at all. Yeah, so to in hindsight, maybe it could be, but I think I'll quote Ralph Elliott that one day, one event doesn't make a market, and what we live in a very, very unique time. Now you're looking at a guy that started in these markets September of 1979. That's my first day on the Chicago Board of Trade, and that was a long, long time ago. Things were it was awesome though. It might have been a long time ago. I wish everybody could have had that experience. It was pretty amazing. Just the way, yeah, the energy, everything, having that many bodies on the trading floor, and everything that happened. I won't go too deep. I have to be careful because usually if I get here, I end up getting triggered into this whole my first time I went to CBOT. The top, I would just say this: the top of the CBOT building, which is still there, but the floors are no longer. But the is a pyramid. At the top of the pyramid was a goddess of wheat. So all I can tell you, you could feel the energy. It was like I always think of Ghostbusters when they had all that energy coming out of that building. Oh, that's kind of a weird analogy, but it was so energetic, and everybody in that room was focused that way. That happens in places like the old CBOT, and the bond pit at that time was in something called the South Room, and the South Room was like about the size of my office I'm in right now, and it was a joke. There were like hundreds of people in a room. You would get stabbed by pencils, and it was a war zone in there. If COVID would have been around, there's no way that could have ever happened, right? But anyway, so I digress. But so what we'll do here is give me just a minute. I'm going to see if I have some kind of screen that says get back. Put music on. Give me a couple minutes. I want to get some screens set up in the background, and we will go through the 3-day trade. And I will kind of unpack this trade, and I will correlate it with the hourly chart I told you about. So let me just see what I've got here on something. I thought I used to have a room, so I'm going to play with some screens here. Bear with me 1 second, folks. All right, I've got a little note. Be back in 5 minutes. Hang in there. Let me just see if I can get any kind of intro music or anything going. Yeah, I guess let's see if I can get that going. Can you guys hear that? If so, I'll be back in just a couple minutes and get some things set up, all right? See you in less than 5. Okay, folks, I'm back. I want one of those two sleeper cell. I want a ticker all around my entire room. That would be awesome. I could tell you, I was talking just a minute ago. We'll get into this 3-day trade. It's 3/5. I'll explain here in a minute. But being able to stand on the floor, we had that, right? We had monitors all around us, right? Around the pit, and it was pretty insane. The new Board of Trade, 1996, I had the opportunity, I ran a floor operation there and we're actually trading the models that I have in our software now in WaveTech. We were running 1, 3, and 5 minute charts trading Treasury bonds live in the Treasury pit, 1996, and we ran a pretty dynamic operation. There were 3 of us just running, 2 guys in the pit, me on the desk, directing all the trades. It was like being a director. It was fun. I was actually trading from a seat, flashing orders into those guys. So it was a lot of fun. We made some money, but we didn't make as much as we thought we would. But just being in that environment and having that experience, I wish everybody could have that. It was really, really special. I ran across matter of fact, I ran across Ferris Bueller's Day Off. There's a scene where they go into the city of Chicago and they went on the Merc. They went on the CME and were watching people trade. It was pretty funny. I was having that was a interesting flashback. Anyway, folks, let's get into this trade. This is something. Let me give you a setup here, and I'm hoping that I'll be able to crop out maybe this section and put it separate on the channel somewhere. I'm working on some new things for the channel, just so you know that we're going to start maybe something like an indicator and section, and then we're also going to have some stuff on the software. We're starting to bring in more institutional clients back in, and retail clients, is just from the standpoint of people realizing that 60-40 passive investing isn't a very good way to go. So these are the kind of times that come out about that. So maybe a bunch of the 60-40 guys feel like they were saved today. They're not. Somebody asked the question, the fact that we got this terrible news out, is that the end? And we're actually, I'm just looking over here, we're actually selling off slightly here in the markets. But I'll stay here with you for a second. Is what I'm going to set up, and I'm going to give you a little bit of background on this so that you understand what's going on. The concept was that when we have, basically, if you're a candlestick guy, this is an engulfing pattern, right? You got higher high, higher low, you get the big engulfing bar. So an outside bar is just that, okay? It's the same context, right? So it when you get those kind of bars, they're climactic in nature. So I'm going to put a little psychology behind this trade and set up a whole situation here. Because I've been saying I'm going to do this video. I'm just going to do it now, and we'll do it live. But the point of this event, it needs to be at an extreme, even a high or a low. In this case, we printed a 52-week low, and we got this incredible engulfing bar. There's something to say when they are as big as this one today. So I'm going to set up. Typically, all you want is the engulfing bar. This swallowed the last 3 days, okay? And when they get too big, the effectiveness is lower. I'm just going to set you up for this particular trade, and I'll talk about this over the next several videos as we go through the nightly commentary that I do every day. But the point of this is that these happen at bottoms or at tops, and they're climactic in nature, and you get something here. I'm just looking at some numbers. Matter of fact, I'll go side by side screen here. I just want to bring up this one number here. I want to see, we did 3,187,000 contracts and counting on the E-minis today. That is not quite double, but it's pretty big over what's normal. Okay, around 1.5, 17, maybe 1.8. We're talking 3.1. So it's a big number. It's way over what you would consider normal. So we have a number of events, and this is a perfect setup, I'm going to say, from the standpoint of being climactic in nature, and also having the ability to see this kind of volume. And I didn't look at the volume on other exchanges and all that, but I suspect that when we go through the trade, we'll look for the setup here. Let me just go over there and just see if we got it on like SPX. Bear with me 1 second here. I got weekly. That makes sense. Bear with me. Yeah, so same thing. SPX, I've got it on screen. I'll blow all this up in a minute, but I really like it. We get cash futures. We got this huge volume that got clipped as well. Let's look at we got 6.7 billion shares traded overall, 30.6 more than we had yesterday. So 130% more volume than yesterday. Okay. So it wasn't 100%, wasn't equal, it's actually 30%. But the point is that we got climactic volume just everywhere we look. We got the price action, and you have to believe that when you get a day like today, it means something. So today means something from an analysis viewpoint. We printed on the SPX, we printed 34.91. Okay, the futures 35.02, and then we've got this huge rally. So volume, climactic prices, all of that stuff. So this setup, and this is going to apply to any stock that you follow in any market, but it needs to be set up so that, let's say you're at the end of a sequence. So you have maybe a multiple week sequence and you get this climactic bar. And this is for 3 bars, and I'll set up the best I can. There's another video that I always direct you to on this channel. I believe it's under how to short Apple. It was when Apple came out with the split. I believe it was in 21, whenever they did their split. I put out a video on that. So that's the short side. Anything I'm going to do the long side because of what we had. So let's try to break this down. Let's get into this trade now. Okay, so I'm going to blow this up just so we can see this trade, see this bar. So you can see what I was saying, 1, 2, 3. Yeah, we didn't quite do 4, but this whole pattern here is, you see this big reversal. And when we get that reversal, there's a couple things. We'll also see the PPMs turning up. I'll bring up the algos here in a minute. These are just the standard PPMs giving us what the last value is. But we get this kind of setup. This is the rules, and I'm going to do my best to. We're doing this live, folks, so bear with me. So we're going to go. So I'm going to type it in. Day one. Day one, let's start here. Reversal day. Day one, buy lower open. So tomorrow you buy lower open. Now it gets a little more complicated since we have an overnight session here on the futures, but we'll just put it here. I'm just not going to worry about everything. So day 1, buy lower opening. Okay. Day 2. So once you buy the, okay, so we have to put the criteria out here for day 1. Okay, so I'll put it under here is A, must make new high. B, cannot take out low of reversal day. Oh boy, this thing doesn't wrap. Let's see. It will wrap when I do this. Reversal day, which in this case would be a disaster if you bought the open tomorrow. Typically what I've been doing is if you have access to the market grid, I would hope that we would hold S1 is must hold is what I've added this over the years. S1 must hold, depending if we open much lower, could be S2. So if we open, I'm going to try to do my best, folks. Open below S1. Below S1, then we will use S2 as a stop. All right, day 2. Day 2 must make new high and close higher. Okay, I need to add something here. Wonder if it's going to let me do that. It's not. Okay. Yeah, I want to add something in. I'm going to do this. I want this to be on day 1, so I'm going to change this. It's not going to let me. Okay. Unfortunately, let's see. I don't even know if I can. Let me see if I can erase some here. 1 second here. Okay, let me erase the whole thing. Oh well, that's okay. Let's go back and try it again. So must not open, hold the day. So also must close higher. Now day 2. Day 2 must render new high. Cannot take out previous low. Low. I'm just trying to shorten this a little bit. Does not have to close higher. Okay. So basically, this is the rule. From day 3, same criteria. Let's make a new high. Does not have to close higher. Cannot take out previous low. So let me, day 3, I just go same. And then day 4, this is where day 4, if new high above day 3, then take profits. Okay, so that's pretty much it. So I'll review this. Day 1 is the reversal day happens, which was today. Day 1 will be the first part of the trade. Day 1 is hopefully we open lower in the morning, maybe overnight. If we get below, if we can get a target between around S1, that would be excellent. Typically, S1 to S2 would be the extreme I'd want to take. This is going to be a big number just because of the magnitude of the range that we had today. And so get through. So here's the deal. If day 1 makes a new high but does not close higher, you're out of the trade. Notice it says must close higher. So that means if, let's say it comes in, we buy it, then at the end of the day tomorrow, if it's not above the price, right, then above today's closing price, then you're out. Done. It's a one-day trade. If the criteria is met, we close higher, then you go to day 2. Day 2 must make another new high, does not have to close higher on day 2 or day 3. But each day, what happens is you raise your stop to just below the previous day's low. So typically, by the time you get into day 3, you're locking in a profit based off the criteria typically. And so now by day 3, you're locking in a profit. You need the same criteria. You need a new high. Don't need to close higher, but you cannot take out the previous low. On day 4, if you print a new high, you just take profits off the new highs. And that's really why it's called a 3-day trade. Day 4 is actually the extension. If you wanted to, I've sometimes, depending on what the trade looks like, sometimes these trades can lead you into something bigger. So let's say, for instance, that today was, what someone asked the question was this, the climactic, is this the low? And it could be, right? No one knows whether it is or not. But a trade like this might get you far enough off the lows that now you can, maybe you can go to the next level and say, hey, guess what? I've got other signals that are telling me that this is valid for a further hold. So this trade can lead you into a bigger one. Typically, if you just do this trade, this is the criteria. And this can happen on an extreme on an intraday chart. It could be hourly chart. 5 minutes a little tight, but hourly is probably better. Get a climactic hour. You get 3 hours. It's a pretty good swing trade indicator. So you can look at these things and look for them. And I think you'll see some really interesting situations. And I'm planning on programming this 3-day trade so that you will have it in the WaveTech signals when we release that just to have that trade in there as a criteria. And I think I always talk about this trade when they happen. I developed this back in around 1982 or 3 is when this came out, long, long ago. And I was just in 1981, just to give you some background and we'll complete here. In 1981, I had my very first trading model I did. And so I've been doing systematic trading since 1981. And it was a very simple system. And it was just a 3 and 10 day oscillator. And I won't give you the rules, but there were some really basic rules. And I just ran that. I had an Apple II with VisiCalc on it. That's how long ago it was. I was the only guy in my office that had a personal computer in his desk in 1980. Literally had it in 1980. Had an Apple II. And in fact, Apple had a color screen back in those days, if you can believe that. So and VisiCalc was the very first electronic spreadsheet. So I started using VisiCalc to crunch some numbers to come up with some how to get these some of this criteria ahead of time, so that I did everything back in those days on the closing price of the day. That's when we executed new trades, took out old trades. So anyway, but the point is that back in those days I was just beginning, and I tell you a lot of you folks, the people that are out there, there's so much junk out there on the market. It's just crazy, and I try to teach you folks stuff that I've used for decades and decades, and have a lot of experience. And our models on WaveTech and PX, they've been running money for 20 years, real money, billions of dollars. We know what to expect out of those things, and they're not perfect, but they do a pretty darn good job at navigating through this risk. For the most part, we've been in 40+% to 100% in cash throughout this year as we came in here. And those of you who've been hanging around the channel for a while know some of the crazy trades that we had with the airlines back in 2020, and things that we put into the software, and the oil trade that came out actually in November of 21 is when the oil trade, no, I take that back, November of 2020 is where the oil trade and the financial trade came out. So if you've been around the channel for a while, those things are where these things came from. So just try to share that information. And I always tell everybody, be careful what you read. You might believe it. And there's some really, really bad stuff I see out there all the time. And there's a lot of good too. There's some really talented people. So it's just hard to sift through those folks. It'd be nice to have a little consortium of getting together with some people to do some things with. And I'm trying to convince a couple of friends to do some things. We'll see that we all respect each other's work. So anyway, that's the trade. We ended up going about 3 hours on this stream. Yeah, and yeah, I guess John Drake, you're right. It's the opposite. So if you go to the channel and you watch, I actually have the rules, and I have a bunch of stuff there. It's reasonable, but it's the opposite side on the inverse of an outside bar to the downside. And there is one other criteria, and it's a hell of a time to tell you. But the reversal day, the outside bar, this is really bad. I'm telling you this right now. So I'm going to have to redo this video. I was hoping to kill two birds at once. But if you're still watching here, the reversal day needs to close in the upper 60% in the range. Otherwise, the bias needs to be to the upside on the bar. If you get a big reversal day and it's 50 or it closes in the lower end, no, stay away from it. If it's so you want to make sure the bias is the case. Well, and today we're probably in upper 80 percentile range of where the market was, maybe a little higher than that, just guessing. So that is one criteria. Excuse me, that's one criteria that's it's good. And that Apple trade was very good, by the way. And yeah, so hopefully you folks enjoyed today. It's something different. Brought a little flavor of what we do in the live trading room, just so you can get a feel for the kind of thought process, what I'm trying to teach, what I'm going on. So today was kind of a fair amount of education and stuff going on while we were watching these crazy markets trade. Yeah, I'm just looking at some of your comments. Yeah, I think it's it may be a one-day wonder, but we'll see. When the market, I can tell you the indication I got. I'm looking at right now. Let me put the futures up here just real quick. I'm going to have to kill this off the screen. Futures still trading 82, so they stayed pretty stable here as we come to the end here. So that was they actually rebounded a bit from the lows. They got down to what? They got down to 78, which was one of those Fib projections. But anyway, pretty stable day. I suspect we will see some overnight selling, and it will be interesting to see, because think about this. Let's say we come in. Let me just see if there's any updates here. Yeah, I don't have, because it's not closed yet, officially closed. I was going to see if I had the market grid. I'll cover that tonight, and I'll bring this up in tonight's video. So, folks, I really appreciate you being part of this channel. I'm glad that we had, I think, a fair amount of folks online today, so that was good. I hope you enjoyed it. See you tonight. I'll be back live again in a few hours. So, yeah, okay, yeah. So someone's pointing out JPM earnings at 8:30 tomorrow. Not good news. Yeah, you know what? If anyone doesn't know that's going to be bad, then they've been sleeping under a rock too long. So I would think maybe that sets up the buying opportunity. Listen, I'll go through. I'm just telling you, the algos, everything is really projecting some interesting pattern here. Just trying to get to the right chart here. Not hitting the right bars here, but yeah, the algos here are PPM2 is crazy. The forecast is crazy bullish. I'll cover it tonight, and you know. And that's one of the things that happens, and that's why trades like this work. That's why bottoms form, is no one's going to believe that today was the bottom. So there's still going to be folks getting caught short like they did today. And that had to be a lot of what we saw. We just saw a lot of folks being stuck in, trying to just cover. And like I said, the issue was there was no sellers. And everybody that was short was trying to buy, and finally they were just capitulating and grabbing anything they could find. And even though we traded, what did I say the total trading was for the day? 3.195. That's a big number for the futures. And I think, like I said, we've got everything in favor for a potential good reversal. And whether it can follow through or not, we're going to find out tomorrow. So I will see you folks tonight. Thanks so much for hanging out. And make sure you hit the like button before you go, subscribe, and hit the notification bell so you know when I come live. Thanks a lot, everyone. Have a good one.